talking about getting a mortgage, and a big mistake you want to avoid making is not having an understanding of how much can you really afford in terms of your own personal expenses and budget. And the reason that is, we'll get into it in a little more detail later, but if you go to a lender, a mortgage broker, and then you go to a lending institution and they give you, an estimate of the kind of home that you can afford, they're going to do that based on your gross income, not on your net income. And, so what that is, if, most people obviously know what that is, but basically gross income is before you've taken any taxes out. And so obviously if you're basing a monthly payment based on your gross income before you've paid any income tax, then that could create a problem in terms of if you haven't figured out, well, how much can I actually pay, based on my monthly income. So that's why a really good tip before you get into the whole process of going and seeing a mortgage broker and getting a loan is the very first thing you should do is just figure out, a budget on your monthly income after taxes, and, figure out all your payments, whatever that is. You might have, you have a car loan and you have a credit card, maybe you've got daycare, maybe you've got a student loan, maybe you've got different expenses and how much you spend on groceries every week. So figure all that out. And then, when you're done with all of that, you're going to have an idea, well, this is pretty much how much we can afford to put into a mortgage payment. And it's maybe going to be close to what you're paying for your rent anyway, but that's a really important step, because often, when you go to a mortgage broker and they base it off your gross income, they might say you can afford this much of a home, which is going to be this much of a monthly mortgage payment. But if you haven't actually sat down and done your basic home budgeting first, that monthly mortgage payment might be stretching your monthly budget when you take all your expenses into account. And it might, actually might put you over the edge where you're like, it's going to be a real struggle for you. So that's a really big first thing you should do, and a really important tip about when you're applying for a loan. The first thing you need to do is just figure out your own household budget. So if you figured out your home budget, basically you have a basic idea of how much you can actually afford per month. Now, what's the process of actually getting a loan, getting a mortgage, so you can go out shopping for a home? Well, the first thing obviously is you're going to have to get in touch with a lender, and the best way to find a good service is through a referral, maybe from a friend or someone that they've worked with, that they know, like, and trust. There's a real estate agent or a realtor around that you get the same feeling for, someone you know, like, and trust. And because often, any good realtor will have a number of good lenders that they work with. And, at this point, I also want to say, check the link below. If you're looking for, a lender here in the Las Vegas area, where I'm a realtor, please reach out to me. This is not anything I make any money out of. I'd be happy to pass on a referral. I do know some good lenders, and most realtors, who are good realtors do. So, that's another source if you don't really know anyone. We'll refer you to what, they might call a mortgage broker. And the good thing about that is, rather than say just going to your bank, which is okay too. That's actually where I got my first mortgage. But, a bank will only have a certain number of loan programs. And, the loan programs that they have available actually might not be suitable for you. You might go in and they say, well, at this time we don't have anything really suitable for you to give you a loan or to approve you for a loan based on, your criteria. So, so as not to have that situation occur, you go to a mortgage broker and they're going to have a whole number of different lenders that they're working with different kind of loan programs. And, based on your criteria of, your income and expenses and all that different kind of stuff, they're going to be able to find a fit for you, where they're going to be able to find a lender who's going to be able to approve you for a loan, so you can get your first home. So, that's the second thing, which lender to go to. And the advice there, again, is, find either a mortgage lender or a realtor that you know, like, and trust, who can refer you to a good loan officer who has access to a number of different programs. The next thing is you found a good lender, someone you know, like, and trust, or you had a referral, or you've spoken to a realtor. And the next thing that's going to happen is, what you really want to do before you talk to a lender is kind of get a number of financial documents ready, because the first step in talking to a lender is just going to be a conversation. It might be on the phone, or you might go and personally meet someone, but they're going to ask you a number of questions to what they call pre-qualify you. And at this point, let's go over the difference between being pre-qualified and pre-approved, because people often, that's a common question. Hey, what's the difference between being pre-qualified for a home and being pre-approved for a home? And the difference is basically the level of documentation. So when you get pre-qualified, you're going to go and talk to a lender, say on the phone. Let's say you've got some basic financial documents, say like, pay stubs, a couple of tax returns, some bank statements, and you have basically an idea of, your monthly debts that you're paying. How much do you make a month? What are your basic expenses? What's your credit score? And without you having to actually provide any documentation to support the answers that you give to those questions. So that's the first step. And then, that in a pretty quick amount of time, less than 24 hours, they're going to be able to get back to you and say, we think, you're going to be pre-qualified for about this amount, to buy a home. It might be, say, whatever the amount is. So that's the first step, but that's not something you can literally take to the bank, as it were, because just being pre-qualified is just based on information without any hard documentation to back it up. And why is that important? Well, the reason it's important is, let's use a simple example. Let's say, one of the key questions is, how much money have you made, your work history and your credit score. So let's say you don't really know what your credit score is, and maybe a year or so ago, it was around 650 or 680 or something like that. And so you say, hey, I think my credit score is about 680, but it turns out in reality that things have changed over a year. Maybe your credit score is actually around 610 now. Well, when they pre-qualify you and you say your credit score is 680, well, that means you're going to be, if it really was 680, you have access to all kind of loan programs that you won't have if it's around 610. And let's say, so that would be an example of a difference between pre-qualified and pre-approved, because when you're pre-approved, the pre-approval process means it's like a second conversation you have with a loan officer, where this time you hand them a loan application and you give them all the documentation, and then they actually run your credit score, and now they find out your credit score is actually 610. And with a credit score of 610, it means, for example, you could no longer be valid for what's called a conventional loan. So that's just an example of the difference between being pre-qualified, where you don't really have the exact hard data, you're just kind of maybe guesstimating, and just as an example, I use the credit score example, but that's a good example, because that often happens. Oh, I think I've got a credit score around 700, but actually your credit score is way lower, or it might be the other way around. But in any event, that's going to be a really good example of why being pre-qualified is not the same as being pre-approved. When you're pre-approved, it's literally something you can take to the bank. So let's get into that. How do you get pre-approved? Well, if anything in this video you're finding helpful, it's designed to be really educational. Hey, do me a favor and hit the like button, smash that like button. So that's just going to help get this my video out to more people, because that's one of my goals, is education of first-time home buyers, so you can be more well-equipped to know how to get your home and do all those things. So, if you like this video, hit the like button and hit the subscribe button. I really appreciate it. That being said, so let's get back into, how do we get now pre-approved? Let's say you found a lender, you had your first conversation, you got your basic documents, in order, so that you can give them some answers to some questions of, your income levels, your employment history, what you think your credit score is, stuff of that nature. They're pre-qualified. You said, we think, you're going to be able to get, a house for around this much money, but now we actually need to do it officially, which is getting pre-approved. So when you're getting pre-approved, that what's going to happen now is you're actually going to have to fill out a loan application. And I want to make a really important point at this point in time, is that at no point in the process I'm describing should you have to pay anyone. And if someone's asking you to pay them for their services, that's a big red flag, and you should not work with that lender. So everything I'm describing is not going to cost you anything but your time to get all your documents and to go through the process of filling out the application form and submit it. So, that's a big heads up right there. So let's say now you've got an application form from a lender that you feel comfortable with, and you're going to need things like your social security number. You're going to have to provide, say 2 years of residential history, the different places that you've lived in or rented. And you're going to have to provide, a lot of personal information, such as, who your current employer is. You're going to have to provide a couple of years of work history, and then you're going to have to provide, pay stubs. You're going to have to provide W-2 forms. So a W-2 form is a tax form if you're working for someone else, that you get at the end of the tax year. So you're going to have to provide a couple of those. In addition to that, you're going to have to provide your tax returns themselves. So the first main area in your tax return form, apart from your personal information like your social security number and things of that nature, is then going into your income and your job and your work history. So that's the first level. And if you're self-employed, and let's say you have your own business, then you're going to have to provide not only your own tax return, but also a tax return for the business, and some 1099s, tax forms of that nature. So that's a big whole first aspect of what's going to be in an application form, is your work history and your current income. And you're going to have to, what they want to see, a lender wants to see 2 years of your income, and what they're looking for are that, you're basically you're working in the same kind of industry. So, it's okay if you've changed jobs. Let's say you work here in Las Vegas, many people work in the casino industry. Maybe you change from working in one casino to another, that's fine. Or maybe you're in retail and you've changed from one retail job to another, that's fine. But if you did a major shift, like, maybe you were a musician for a while and now you've gone, you're working in the police force, or, like a major career shift or change, it's going to be harder for you to get pre-qualified if you haven't been in the same profession for 2 years. That's what they're really looking for, is 2 years of working in the same kind of industry. So that's the first main part of a loan application, is your work history and proof of your income that you're getting through your tax returns and pay stubs in that chosen profession. So that's one area. The next thing is going to be things like assets. The assets are going to be proof of funds in a bank account, for example. Maybe you have an IRA, maybe you have a 401k. So you're going to have to provide, information about, those accounts, how much are in them. And the reason, a lender wants to know, the level of your assets, how much cash you have in the bank, for example, is because when you purchase a home, you're going to have to come up with a down payment, and you're also going to have to come up with closing costs. If you can't come up with a certain amount of money, which is in the thousands of dollars, multiple thousands of dollars for a down payment and for closing costs, then effectively you're really going to have a hard time getting approved for a loan to purchase a home, because you don't have the funds to complete the transaction. So that being said, it is important to know that there are loan programs that require 0% down in terms of a down payment, and there are some loan programs that will provide assistance for you for your closing costs. So, that's why you want to talk to a loan officer, because if you are in a situation, let's say, where, you've been working and you have a good job and you have pretty good pay, and, you should be able to have no problem on that level of getting qualified for a loan, for getting pre-approved. It's just that maybe at this point in time you don't have a whole bunch of cash stashed away for a down payment and for closing costs. Well, there are loan programs out there that can help you with that. They can help, pay, and even down to 0% or 3% downs of something of that nature. But I'll go over that in other videos. And in fact, if you want to know something about that, check the link right now above. I go into different loan programs in another video. It's called Home Buying 101. So check out that video. It goes into, for example, FHA programs, conventional loan programs, VA programs, where you can put very little down payments down. And there's another video too you want to check out of mine. It's called What's the Difference Between a Down Payment and Closing Costs. It goes into all those things too. So check those videos out for more information on those things. But let's get back into getting your mortgage, getting your loan application done. So at this point, you've got your loan application, you've gathered all your different financial documents relating to your income levels, your tax returns, your pay stubs. Now, there's a couple of other areas they're going to want to know about. You've also, providing information about all your different bank accounts, maybe, and if you have like an investment account, maybe you have an account with, investing, someone like, Charles Schwab or something like I do, so you're going to have to provide information about that, how much you have in some investment accounts. Maybe you have money, from capital gains. So you're going to have to provide information about that through your tax return. And then maybe you've been through a divorce and there is child support involved in your life. Either you're receiving child support or you're being required to provide child support. In either case, you're going to have to provide documentation about that, how much you're receiving or how much are you required to pay each month. And then also of that, you're going to have, like your certificate of divorce. So, you have to gather all those documents together, in that. So that's going to take care of, all the different aspects of your life in terms of income, money going in and money going out. We have to provide information about, debts you're servicing, credit cards and car loans, student loans, all those different things. And then, so when you get all that finished, when you get your loan application all done and you've dotted all the, I's and crossed the T's, then you're going to submit your loan application. And, two ways you can do that. One, you can either just take it physically, with all your documents. You're going to have to take your documents to the lender with your application, and you're going to have at least a copy of them anyway. And you can either submit it personally, or many lenders now have online portals, so you can do it all online, upload all your documents, all your documentation with your loan application. And so that's the next step of actually of getting a mortgage, is then you've gathered all your documents, you've filled out your loan application, and now you submit it. So the next question is, well, how long does it take? Once I submit my application, you have to wait weeks, months, how long does it take? Well, the good news is it shouldn't take that long at all. And in fact, here's something pretty cool. If your loan application is, let's call it like a cookie cutter, like it's a fairly standard one. Let's say, you work in a job where, you're working for someone else and you've been there for years and years, and you don't have too many outstanding debts, and everything's pretty simple in your life in terms of it's pretty clear cut of you make this much money, you work at this place, and these are your debts, and everything's pretty simple. You could get a reply in as little as 4 or 5 hours. Literally the same day. If there's more complications, and it also depends on obviously how busy the loan officer is who's processing your application, because they're going to have to run a credit report on you. It might take a couple of days. If there's more, maybe you have your own business, for example, and you maybe got multiple income streams, and you've got child support, and you've got a whole bunch of different things, and it makes it all a little more complicated. Well, you might have to wait 24 hours or 48 hours, but it's still not that long. You should have an answer back about your loan application within 2 days, so 2 business days. So that's a good deal. And what they're going to do, what the lender is going to do, they're going to run a loan application. One thing they're going to do once they gather all your information is they're going to first of all run a credit report, and when they do that, it's going to tell them about all your liabilities. Like, you have a car loan here for this much, you have a student loan here, your credit cards, is at this level. So they're going to get all that information. And so once they have all that information, and they're going to get a credit score for you, once they have your credit score, they know your liabilities, they know your income, your employment history. What they're going to be able to do now is form what they call a debt to income ratio. So, that's a pretty simple thing, and you have to have a number. For a lot of places, it's going to be when every month you make, say, let's just throw out some numbers. Let's say you make $2,000 a month, and let's say your debts come up to $1,000 a month. A real simple equation. That means your debt's basically 50% of your monthly income. That's borderline too high. Let's say your income is $3,000 a month, and your debts are only $1,000 a month. So at that level, your debt to income is only around is at 1/3. It's around 33%. That's great. You need to have your debt to income level at around 45%, between 45 and 50%. But it also depends on what loan program you go to. For example, an FHA loan. You can get an FHA loan with a debt to income ratio as high as, say, 57%. So, going back to the previous examples, let's say you have a monthly income of $3,000 a month. That means you could have your expenses at, $1,500 a month would be 50%. So 57 would be, I'd have to run it through, but it would be like probably $1,900 a month, something like that. So that just gives you more leeway. So once they've figured all that out, what they're going to be able to do is then they're going to come back to you and tell you, the kind of loan programs that they feel that you could apply for. So it might be that, you could apply you could use a conventional loan, or you may be eligible also for an FHA style loan. Maybe if you're a veteran too, you could be eligible for a veteran's loan, which is a really good deal. So once you know that, then it's going to really, refine the whole process. And assuming that you're going to be eligible, for some different loan programs, they're going to give you what's called a pre-approval letter, and that pre-approval letter is just going to be literally something that you can literally take to the bank. It's going to say, it's going to have your name and say so-and-so, has been approved for the amount of, and it's going to be whatever it is, 300,000, 350, 400,000, or whatever it is. It's going to have your credit score there. And it's going to also state, the interest rate, of the type of loan that you might be getting. So that's a good deal. So right there at that point, when you get that letter back from the lender, that's called a pre-approval letter, and that's what you're waiting for. So you've submitted your loan application, you submitted all your documentation with it, they've run your application, they've found that they can go ahead and work with you because your criteria fits in with a certain parameters of having a loan, how much you make, how much your debts, what's your credit score, all those different factors, and they run all that together. They give you the pre-approval letter, and now you can literally go out and shop for a home. Let's say you're pre-approved for $330,000. Now you can literally go out and start looking for homes that are under $330,000, and if you find one that you really like, you can make an offer on that home. You usually have to submit your pre-approval letter with the offer, and the lending institution will honor that pre-approval letter. If you get your offer accepted, then you get your loan finalized with them. They approve the loan. Then you buy that house. They get you the money to buy the house. So that's a good deal. So that's, in a nutshell, the whole mortgage, getting a mortgage, 101. So I hope that's been helpful. You might have some questions, and if you do, please do leave a comment. I love comments, so please leave a comment below if you have any questions, because often comments will have really interesting questions, and often I might even make a video on a really good comment, that has a good question in it. So, or at the very least, I'll try to answer your comment personally. And also, again, if you're wondering, well, who should I go to? I really am excited about getting a mortgage and getting pre-approved and buying a home. I don't really know who to talk to. Well, reach out to me. You'll find a link in the description. Look at the links below. You can contact me directly through that link, through the links that I provided. And I know a number of lenders that I can refer you to. I don't make any money from this. This is just for educational purposes. But I do know lenders that are really good and that will treat you well and get you on the right track. So please do reach out to me if you feel that you want to do that. I'm really happy to do that. And if anything else in this video has been helpful for you, please smash that like button. Let's get more people out educated and knowing about how to get a mortgage and how to get a loan. Hit the subscribe button, and I look forward to seeing you all in the next video.